Okay, thanks for everybody's participation. I'm Nicolas Veron. On behalf of Bruegel, it's my pleasure and honor to introduce a session devoted to the question of, if I can put it with a lot of negatives, wartime non-military financial assistance to Ukraine. So this is not about the reconstruction, it's not about the military assistance, but it's about the financial assistance to the government of Ukraine during this extraordinarily challenging period. And I don't have to expand on what is at stake for Europe, but I will rather just express our gratitude on behalf of all my Bruegel colleagues, including our director, Jeromin Zellmeyer, who I think is in Madrid today, but with us online. Our gratitude to Minister Sergei Marchenko, the finance minister of Ukraine, and I give him the floor immediately. Minister.
Thank you very much. Dear ladies and gentlemen, this month for our team, we had a number of international work trips, Washington, D.C., Vienna, Brussels, Sarajevo. Today I returned from Berlin. We constantly talk with our international partners, government, IFC. Our message is quite simple and obvious. Illegal Russian invasion in Ukraine is the main reason of most of Europeans' problems and problems which created throughout the world. And to solve them, we need support from different partners, support that will help us to defeat Russia and come back to a normal life. Today, the whole world feels the consequence of the criminal actions of Russia in Ukraine. Many of humanity achievements such as global peace, security, and rule of law were hugely undermined. The majority of countries are dealing with high energy prices, spiraling inflation, food uncertainty, and the increase of cost of borrowing. Many were forced to recalibrate their budget towards high military spendings, replacing those things that mattered to them before the war. Increases of energy, gas, and oil prices cause a replenishment reduction in ESG expenditures in order to use the money to purchase fossil fuels, which again is contrary to the environmental plans that exist in many of our countries before the Russian war. Populist politicians have come to power and made reckless spending pledges. There is a danger that is in many countries budget deficit and debt could spiral out of control. Today we see a numerous political crises and resignation of the governments of many countries. Over the past 6 months, there has been a change of governments in different countries which previously supported Ukraine. But again, we believe that existing new government will step in and support Ukraine as the previous. But there is a solution of these problems. Weapons for Ukraine, sanctions for Russia, budget support for Ukraine. We need more of all it to stop Russian aggression. I am, as Minister of Finance of Ukraine, responsible for financing all necessary budgetary needs. Now it's only essentials, social payments, wages for teachers and doctors, pensions, payments for the most vulnerable, recovery of critical infrastructure, and of course, military. We ask for support not because of mismanagement or wrong policy decisions. Before the war, our deficit was less than 3% of the GDP, and debt to GDP ratio was less than 50%. Many of my colleagues could only dream about such figures. We ask for support because Russia destroyed our economy and keeps shelling out people and infrastructure every hour. But even in such conditions, we are, as Ukrainian government, doing our best. We are trying to maximize to the extent possible the revenue collection. Revenues from taxes and fees have increased. If in April the budget received around 45 billion hryvnias per month, in August the revenues amounted to 65 billion. If in March we received only 7 billion of customs, then in August the customs duties increased 4 times to almost then 30 billion hryvnias. We managed to save almost $6 billion with consent solicitation due to the agreement reached with Ukraine's creditors regarding suspension of debt payments until the end of 2023. We proceed issuing war bonds. The security and defense sector has been fully financed. All social expenses, pension salaries for teachers and doctors have been financed. We provided support for forced migrants who have lost their jobs and homes. In total, up to date, Ukraine has already received financial support of 23.1 billion US dollars, out of which almost 50 are grant funds, do not need to be returned, so the debt burden does not increase. I think in a state of full-scale war, we as a government have done a good job to reduce the budget deficit, but we still estimate the need to finance the amount of 3.5 billion per month in 2023. And this is only for social essential budgetary spendings. We are assuming for 2023 that the war drags on. Prolonged war will exacerbate infrastructure damage, population displacement, economic hardship, and can increase poverty. If our needs are not fully addressed, this will result in immediate and severe economic disruption. In our draft 2023 budget, we have compressed all non-priority expenditures and reoriented spending towards critical needs and to support our defense effort and to support our citizens most affected by the war. Another issues we are dealing with is recovery, and last week Russia furiously keeps shelling Ukrainian civilians and critical infrastructure. Damage is rising dramatically. Around 40% of Ukrainian electric and thermal power station facilities been damaged. But we are not talking about huge recovery efforts. We are talking about repairment of the most needed infrastructure for Ukrainian people. In the meantime, we are doing all necessary steps to recover the critical infrastructure. And in 2022, government of Ukraine spent more than 200 million US dollars for our reserve fund to repair our critical infrastructure. The draft of state budget for 2023 foresees expenditure for the restoration support of citizens and business. It's amounted 1.5 billion US dollars. Already seized Russian assets in Ukraine in amount of almost 800 million US dollars is one of the sources to fill this need. But this is clearly not enough. The country will need financial assistance from our partners to ensure ability to provide people with essential facilities. In 2023, we need to proceed attracting external concessional funding and grants to cover priority social budget spendings in one hand, and make a well-structured, good-footed, and trusted fundraising exercise for rapid recovery on the other hand. We need to restore essential infrastructure services. Those who had to flee the country and those who are internally displaced peoples have to be granted the conditions to return back home. We are well aware that it's not only government of Ukraine dealing with our allies, governments. It's Ukraine's nation call for other nations in the world to help us in this time of our history to protect freedom and contain Russia's aggression towards Ukraine. Thank you very much to be hear me and to listen me, and I am very proud to be with you, and I'm here to maybe answer your question if you have. Thank you.
Thank you so much, Minister. And I think, well, words escape me, but as a European, I want to express my gratitude for the efforts of the Ukrainian people, of the Ukrainian government, and of yourself. I also am grateful on a much more mundane level for your willingness to take questions. And actually, I would welcome questions from the fellow panelists and from the audience. I, of course, have questions of my own, but you have the priority. Gertjan.
Thank you very much, Minister. Thank you for your presentation. There's been a little bit of a discussion as to your financial situation this year until the end of the year, both in Vienna and yesterday in Berlin. We understand that you are fully funded until the end of the year. Could you speak to that?
It's a very tricky question. If you look at our existing budget for 2022, our budget needs is not fully covered yet. But again, if we look at perspective, if it should be in a pre-war time, that our need is not fully covered, and together with the IMF team, we see that the gap is still huge. But I will separate the planning figures of our budget and our probable ability to have fully capable expenditure till the end of the year, and our existing needs of liquidity. So that's why I will aware that money is not enough, but we can manage to feel comfortable due to the fact that we expected to receive additional macro financial assistance till the end of the year from the European Commission, as well as support from the United States. Based on these conditions, I will feel myself comfortable. But again, it doesn't mean that we can cover all our expenditure to the end of the year. It means only that we can manage our liquidity gap, and we can manage to fulfill our social and humanitarian commitments, and can proceed with our military expenditure. Other expenditures can be postponed, can be delayed, and we are not able to execute all expenditures in our budget. Even if we talking about not capital, but some type of social and humanitarian. But as of critical expenditures, we are capable to fulfill it.
Any follow-up question, Gert-Jan? Gillian?
In generating the necessary financial support this year, what are the lessons learned as you look ahead to 2023? What as a collective group, when you put the financing together, would you like to see improvement on? Or what would ease the burden on Ukraine?
Thank you very much. A good question. Lesson learned. If we start looking at back March 2023, 2022, and April, we agreed that our monthly gap is around 5 billion. And the real disbursement of money is far away from this figure. For example, April it was only 1.7, May it was only 1.5, June 4.4, July 1.7, August 4.7, September around 2. So it means that we are struggling every month to find necessary support to cover our budget needs. If we not meet our needs with our concessional financial, with our donors, creditors, we will have only one solution. We will come to the National Bank of Ukraine and to monetize our deficit. And it created some problems within the country. Now our inflation will estimate around 30% till the end of the year, and our currency is devaluated around 33% as well. So it means that there is some damages. And what lesson we learned, that for us it's important to have predictability. If we can't receive money in time and in a predictable manner, it will be a problem for us. So my plea for my Ministry of Finance of Ukraine to provide us a very clear vision when in time we can receive support, because even a huge amount of commitment will not help us in the first quarter of 2023, because first quarter of 2023 now is the most problematic for us.
Beatrice?
I had not raised my hand, but I am happy to.
Yes, you have the floor.
Okay, all right. So am I also allowed to show two slides that the minister actually showed yesterday in Berlin? Because
I think we can do that after the minister leaves us. I want to take as much as possible of his time for this conversation. So if you have no questions to him immediately, I will give it to Maria Repko.
Okay, no, I don't have any questions for him. We were able to exchange yesterday.
Okay, Maria.
Yeah, thank you so very much for agreeing to answer questions. I was wondering, what's your take on the Berlin discussions? I know that European Union is thinking of providing Ukraine with more funding for the next year, for 2023. But we both know, and I think that everybody in this room knows, that pledges are not equal to disbursements. So what's your take on that? Is this promise closer to delivery than the previous ones?
Thank you very much, Maria, for this question. You know quite well that it's a huge difference between commitments and real disbursement. And what I've shown on figures, it's far away from our needs. And I believe that commitments which yesterday were made by President of European Commission Ursula von der Leyen is give us some possible ways of thinking that for next year we will capable to find the solution of additional macro-financial assistance for Ukraine, which could be around 18 billion euro. But again, for us, it's important to make some planning in advance. For now, it's not clear if we can use this money in the first quarter of 2023. That's why we had several meetings with the Minister of Finance of Germany, with my colleagues from other ministries, other countries. And my plea was just if you are ready to support Ukraine, please do it in a more fast manner and more quickly, because if it will take some time for you to create a solution, we have no time. January is not far away from this moment, and January is not covered. So we're expecting that the United States also can step in, but again, there is for me it's not clear when money can be disbursed, and if not, so we should find another options, and we will look at another perspective, maybe deal with bilateral creditors, etc. So that's why predictability is so important.
Minister, on behalf of all my colleagues at Bruegel and of the audience, I want to thank you for your time. You said it, time is precious, so we don't want to abuse your time. You're fighting a war. We're extremely grateful and appreciative of the fact that you were able to join us today. I have to say our thoughts, or certainly my thoughts, I think most people's thoughts in the audience are with you, with your colleagues in the government of Ukraine, with the people of Ukraine who are struggling and fighting and dying for Europe these days. Thank you so much for attending this event. With that, let me, while the people of Ukraine are fighting and dying, the people of the EU are taxing and spending. So we are going to go into the numbers. Let me start maybe with you, Gillian. You're economist at Wellington Management, of course, a major asset manager. And you have spent a lot of your time this year looking at Ukraine. I think you have a few slides to set the scene.
Sure. Thanks, Nicholas, and thank you to the Minister for taking the time there. So let me open by saying that if I was told 7 months ago that we were where we are today in terms of military conflict, I wouldn't have been able to foresee the level of macro and financial stability that Ukraine has managed to maintain. When I say that, I don't want to subtract from the humanitarian costs of this conflict or the extreme weakness in some of the macro numbers that we have in Ukraine. I mean, we're probably looking at a 30 to 35% decline in real GDP this year. But there is a degree of resilience in this economy, and I think that speaks to three different things. One, I think it speaks to the amount of reform that was undertaken in Ukraine between 2014 and 21. And that meant that the starting point in balance sheets when this conflict hit was strong. I think second is the government's ability to continue to function very impressively over the course of this conflict. Part of that, I think, is lessons learned through COVID. Part of it is an improvement in governance that we've seen since 2014. And then thirdly is the large amount of grants and loans that Ukraine has been able to access. We may exceed $30 billion by the end of the year. So let me do two things. One is run through what we're seeing in the data right now, and then two, give you a sense of what we're monitoring for 2023. The first slide, if you can see it here, looks at external accounts. Ukraine has actually shifted towards a larger current account surplus over the course of this conflict. And that's despite a very large contraction in exports. Hopefully that contraction will continue to ease in the coming months, but it was certainly very tough over the course of the first 3 to 4 months of the conflict, and is still far from easy today. Because the capital account is being closed, the combination of that current account surplus plus large donor funding has meant that reserves are in a good spot. They're down from where they were at the start of the war. But they have stabilized, they have ticked upwards in recent months, and you're looking at reserve to import metrics in Ukraine of close to 4 months at this point, which by emerging market standards is a reasonable number. So I would say broad stability on the external front. If you move to the next slide, and I guess in some ways this is reiterating what the Minister has just said, the budget deficit has widened very rapidly. And this is data to August. It will continue to widen between now and the end of the year. And we'll probably finish the year with a budget deficit not far off 20% of GDP. But I do want to differentiate between the budget deficit that includes defence expenditure and that does not. And I think that's really the cost that's been layered. That's the fiscal cost. I mean, there are many costs, but that's the fiscal cost that's been layered on this country right now. I think on the expenditure side, there has been quite some significant discipline in the budget since the beginning of this war. And lastly, just the last slide, what are we seeing in terms of inflation and financial stability? There has been a cost in terms of inflation, shortage of goods, currency depreciation, and uncertainty. We are seeing inflation right now run at about 25%. But I do think the work that has been done on inflation targeting in recent years means that at least at this point, we're not looking at the sort of inflation pressures that we saw during the 2014 conflict. And I want to accompany that with two more statements. One is what we're seeing in terms of the central bank and financing. The central bank has had to step in and help finance the government at times, but I do think there's been an effort to anchor that commitment to inflation targeting. A lot of that funding has been sterilized via FX interventions and the issuance of central bank debt. And lastly, again, speaking to the reforms that have been undertaken since 14, what we're seeing on the banking system, I think, is impressive. So it's a banking system that had delevered a lot. You've seen a loan to deposit ratio here come down significantly, is well below 1. And it's not something that's deteriorated over the course of this war. What we have seen is that the general public is willing to leave their funds in banks in Ukraine. There has been positive deposit growth, and there's been pretty limited dollarization over this period. So that's something that hopefully eases the burden at least a little. As I look ahead to 2023, obviously the conflict is top of mind and will be central in determining where the Ukrainian economy is 12 months from now. But on the macro side, I would point to two things. One is always domestic policy. On the fiscal side, we're watching revenue in particular. and if there's more that can be done in terms of revenue maximization. And on the monetary policy side, getting that balance right between protecting against excess inflation, but also not having a currency that is overvalued or a currency that requires persistent FX intervention. I acknowledge getting macro policy right in this environment must be very difficult. The second piece we're looking at, and I think the Minister has already mentioned it, is just importance around importance and clarity on the size and timing of donor funding, grants and loans. I think we've all heard at this point there is an effort underway to move towards monthly disbursements from the US and hopefully the EU. There is an effort underway to provide oversight from the IMF. I think if all that can be achieved, it would help the Ministry of Finance and the Central Bank in terms of reducing uncertainty and guaranteeing funding into next year.
I should have mentioned at the beginning that this is a joint event organized cooperatively by Bruegel with CEPR, the Center for Economic Policy Research, and with the Center for Economic Strategy in Kyiv. Of course, Beatriz Veder Di Mauro is the president of CEPR. She's also the professor of international economics at the Graduate Institute of Geneva. Beatriz?
Thank you very much, Nicolas. So let me try to share just 2 or 3 slides, which in fact are the ones that the minister was presenting in Berlin yesterday. Can you give me a confirmation that you're seeing them?
At this point, I don't see them, and of course you're referring to the International Expert Conference on the Recovery, Reconstruction and Modernization of Ukraine, which took place
Correct.
yesterday in Berlin.
So
and
you do not see them in that case, because it is right now actually supposed to be projecting. Well, in that case, if doesn't work, then I'll stop broadcasting and I'll just talk to them. So the first slide actually that I was going to show shows very, very impressively in this year the Ukrainian government has been getting most funding from, and the answer is from their own central bank. So it's the National Bank of Ukraine, which has provided most funding for the deficit in this year. The next one following is the US, and then there are a number of other governments that have provided budget support. The second point to make is that this funding gap that was filled by monetary financing was increasing significantly in June. It amounted to about double the size of May. And that also was the time when it became obvious that the war would not be over in a short time. And therefore, this could not continue. You may be able to do some funding of a war through seniorage for a while, but not if the war continues for a longer time. And this is the time when, for CEPR, we wrote the second rapid response report under the leadership of Yuri Gorodnichenko and a whole group of other economists who joined in, so several of them former chief economists of the IMF, and which essentially makes a few points. The most important point being that the Ukraine right now macroeconomically is a war economy, that it is, we can also describe it as, or I like to describe it also as a pressure cooker. If at the same time your output collapses, your expenditures explode, military expenditures explode, and you are trying to stabilize the exchange rate, which is what they were doing, then you run straight essentially into the impossible trinity, and something is bound to give. The main thing that gave already is the inflation. So there's pressure on prices. There is pressure also on the exchange rate. And that is why it was definitely not sustainable, the policy that this year led to the fact that monetary financing was essentially needed to pay for military expenses in Ukraine. So to put this a bit more drastically, what is going on here is that at the same time, the Ukraine is sending their men to the front and financing it through the inflation tax. So that is kind of really adding insult to injury. And it means that it really became obvious that both things had to happen, and a lot of this homework has been done in the Ukraine in terms of their budget for next year. They have already cut a lot of expenditures that they were able to cut. But also it is necessary to be much clearer about the need for budgetary support. And this expert conference in Berlin yesterday was very clear about this. The numbers that the Ukrainian minister, that would have been my last slide, shows for the next year in their budget planning is a budgetary need of 38 billion over the year. And the announcement, I don't think it is already a commitment, because it's not quite clear how this commitment will translate into or this announcement will translate into actual disbursements. But the announcement by the president of the European Commission was that the EU would try to shoulder 18 billion of that. Now, of course, it is not only important to have the number, it is important to have the disbursement, and it is important to have them in time, because what's happening right now also is that for every continuous disruption and bombardment of critical infrastructure, that need essentially goes up. So we are in a situation where it is absolutely essential to find this financing. And one of the lessons also and that was actually one of the questions yesterday from a smaller donor country, was saying, financial or budgetary support is not very sexy to be provided, because donors cannot put their name on it, they cannot identify the project, and moreover, in many cases, they somehow are also restricted. International organizations have their own mandates, their own procedures, etc. So what is left over at the end of the day is this budget support, which is not being financed. The problem is that it is also the most important, because this is definitely not, it cannot be the case that the Ukraine is financing military expenditures through their own central bank, or that we are forcing them to do so. So that is the main message. And the headline number to take away is 38 billion. I think this is the one thing to remember from this conversation, and in terms of what needs to be done next. Then there is the question of not only who finances, but there is also the question how you organize the coordination between the different donors. And that's where immediately there is a lot of architecture discussion and governance discussion, who should be in the lead, and what kind is the platform that the EU is putting up, the one that is actually leading and coordinating, or is it an uncoordinated and essentially led by all the different donors' effort, which is what we have had so far. And the answer, of course, has to be, especially also when we are looking into the more medium run, that we do urgently need donor coordination and not donor competition for all types of financing of the Ukraine, not only budgetary support. And that's why, again, the EU platform and the offer of a secretariat by the EU to offer this to provide a secretariat for this platform is, in my view, absolutely crucial. There is only one club right now that is open to taking new members, and that's the EU. The US and the UK are not taking any new members. And that's why ultimately it is very, very clear that the anchor of any process, of any longer term process that the Ukraine does in terms of reconstruction, in terms of rebuilding, should be anchored into the accession process. And one last point that I wanted to bring to the table here, and that is also learning from yesterday. The Minister of Infrastructure showed a very, very interesting phase model going from martial law, current martial law, to the Marshall Plan. And the Marshall Plan being all about reconstruction, martial law being about defending essentially the border. And then he allocated the different phases of this model to the country in terms of right now, in certain parts of the country, it is already about reconstruction. In other parts, it is about defense. In others, it is about building back better and repair. So these things have to be going on at the same time. They are not independent of each other. And therefore, the plan also, the Marshall Plan, the longer term plan, has to be part of the thinking today.
Thank you so much, Beatrice. And I think we heard the message both from you and from Minister Marchenko that commitment is one thing, but disbursement is what matters. So, Gertjan, how are we doing in that space with the European Union? Of course, you're the Director General for the budget at the European Commission, so disbursement is your turf.
Yes, thank you. Let me start by saying that I agree wholeheartedly with a lot of things that Beatrice has just said in terms of the strategic direction, the need to articulate the relief and rehabilitation phase we're going to see next year with the preparation for reconstruction and not postponing that. I think that is essential. I think that it is also worth recalling that we have seen a scramble for support, uncoordinated. I think Beatrice also said that, which has not been, I think, our finest hour collectively. But gradually things are falling into place, and therefore there is clearly a sense of optimism. The European Union has pledged 12.5 billion euros, and to date we have disbursed 7 billion euros. This is financing from the budget or backed by the budget. And I am happy to confirm that still in November we will disburse another 2.5 billion of the outstanding macro-financial assistance, and then in December $500 million to bring the total macro-financial assistance to 7.2 billion euros paid.
So just to clarify, that means this is money that has arrived on a bank account of the government of Ukraine when you say disbursement.
So I mean, we have everything in place. I'm borrowing the money in the market. We disbursed in October. Just I think it was last week. Yes, it was last week. It feels like a long time ago, but it was only last week. We'll do it again in November. We have already planned the financial transaction. This is money that we borrow on the markets, and we'll do the same in December. So I think that is important because the start was frankly speaking a bit slow. Now for next year, and I think this is really critical, we need a more structured, predictable framework covering the whole year. And this is basically what our president has explained yesterday, that we are looking at an instrument covering the whole year so that we don't have to put up tools that run for a few months and then we have endless discussions. This clearly is simply not fit for purpose in the circumstances we find ourselves in. The minister set out the funding needs. We are working towards making available a contribution of 18 billion euros, 1.5 billion euro per month, which roughly speaking is around 50%, maybe slightly less than 50% of the financing needs. That's what the minister said. So that's a serious commitment. Now we need to follow through. There are a number of technical questions I won't bore you with, but a large part of this will continue to be loans. And I want to say a word about that because sometimes in the international debate, loans are seen as bad. And grants are seen as good. And of course, the more grants you can do, the better. But it's important to underline that the type of loans we are looking at are loans with a very, very long duration, a grace period that is very long. And we have also for the MFA loans that are going to be disbursed this year, we have taken a commitment to cover the interest costs until the end of this multi-annual financial framework. So given that we are a AAA rated issuer, we also borrow at very advantageous conditions. And if you add all of that up, you are looking at highly concessional support. So yes, it would be nice if we could do more in the space of grants, but this is something that will avoid the need for repayment, avoid the need for interest cost payments by the Ukraine for many, many years to come, and the interest rate cost in any event thereafter are likely to be low because we intend to use our diversified funding strategy, our means of generating very cheap loans, also for the new package. We are racing to put this in place. There's not much time left. The minister was very clear. We need to have the money flowing in January, so that is tight. But I think that also following the discussions in Washington, there is a renewed sense of urgency. I think our president took a very strong stance on this yesterday, so I'm confident that we will be technically ready to do all of this, and then it's down to decision making. This is a matter of days, maximum weeks, before we move forward with this. And if the legislation is put in place by early December, then we should be able to go to the market still at the end of December so that we can disburse in January. So I want to send a clear message of commitment, of determination, and of planning, elements that might in the past few months not always have been fully in evidence. Final point I want to make is that beyond the macro financial assistance, there is also a lot of other budget support, EU budget support, that is flowing to the country. We will see what can be done to ramp that up. The EU budget is small, we all know it. We are not the United States of America in terms of fiscal space. But nevertheless, when it comes to things like food security, repairing schools, all of the sort of practical things that need to happen next year, there is work planned and there is money being reserved. Final point.
How much money?
Well, that is still subject to a negotiation on the annual budget for next year. The negotiation will take place on the 11th of November. Final point. We all know that this is just a transition phase. This is a relief. It is helping with rebuilding where possible, but it is small fry compared to what we will need to do thereafter. The reconstruction effort that needs to be planned. The planning is starting. That's where this platform comes in. And it's a very, very good thing that we are moving forward with it now, because if we talk about a Marshall Plan, what we do next year is a very small hors d'oeuvre. The real work will be thereafter, and we will be looking at much larger sums in the hundreds of billions that will have to be shared. The EU cannot cover all of that, but the EU will have to cover a very substantial part of it. It will need to be planned, and that is a genuine Marshall Plan also in terms of dimensions. So this is going to be an effort of many, many years, if not decades, and it is very clearly intertwined with the EU accession process as well, which will make it a very specific type of support effort. Thanks a lot.
But on that last point, clearly the framing of today's discussion for this event, I'm not talking about yesterday's discussion in Berlin, is wartime support. So we're not talking about reconstruction,
Correct.
because reconstruction is a different horizon. And indeed, the big progress in a way of the last few days, at least in the public space, is this commitment during wartime with an assumption of a longer horizon than we had until pretty recently in the European conversation. So can I push you a little bit more here? Let's assume that the war is a long war, and of course, if it's not, and there is a satisfactory outcome before that horizon, then that's good news, but I think we have to prepare for a long war, at least as a matter of policy stance. Wars are unpredictable, so what if the needs get much bigger in the course of 2023? And 18 billion euros looks like far too small an amount in that realm of wartime, macro-financial, or whatever we want to call it, support. How do you see things evolving from there? I know it's a bit, annoying that I'm just at the moment you announce a major step up of the European effort, I'm asking you what next, but that's the circumstance we're in.
Yes, that would be a very gloomy scenario, obviously, if the financing costs become an order of magnitude bigger. I cannot speculate exactly how we will react, But what I can say is that the determination that the Union has shown is very, very strong. And from my more technical perspective, the technical solutions we are trying to put in place would accommodate also larger support. That naturally is a political decision. That's not a decision for technical people like myself, but it's our responsibility to make sure that if that is needed, it can be implemented quickly.
So European support is scalable, as they say in the tech industry. Let's hope we don't get there, as you said. Maria Repko, you're the Deputy Director of the Center for Economic Strategy. And as I said before, this event is organized by Bruegel in partnership with the CES as well as CPR. Over to you.
Thank you very much, and thank you for hosting this event as well, especially after Berlin conference, where all the attention was on Ukraine. But as Ukrainian, I think that there could be not such thing as too much attention to our country now, especially in terms of funding. I want to thank very much Gillian, because she showed like almost all the charts I was going to talk about, but let me please just color it a little bit with the numbers, which I believe would just probably give a little bit more understanding of what was going on in the field while those developments were shown on charts. For example, when the National Bank was forced to print money to cover huge budget gap, when foreign funding was not incoming, like yes, when Mr. Marchenko said, when there was like 1 billion, 1.5 billion, and that was far not enough to cover the military spending increase. So what happened? National Bank started printed money, and this money immediately flowed to the currency market. National Bank was effectively bleeding reserves. It was selling $1 billion per week. And the total number of reserves that time, it was like $28 billion. So you can imagine there was enough money to cover 28 weeks of this rate of reserves depletion. This is the first thing, yes. The other thing, just to illustrate like what's the degree of the budgetary strategy, I would say, for Ukraine this war is, the defense spending, they were at $200 million before the war. Now it exceeds $3 billion. This is over half of total budget spending, of like total budget spending. It's like 66 or something % if we count some other spending as well. So of course, Ukraine had to cut everything down to the bone. What it means, we can say okay, the expenditures were cut, but what it means. In July, when there is no funding from abroad, Ukraine had to cut education, healthcare, some social spending by 25 to 30%. So it was like in 1 month. One friend of mine, he said that, okay, if I would be cynical, I would call that a very impressive fiscal consolidation. Like, I understand this is the pretty dark joke, but we still do that. 30% for education, 30% for healthcare. That money just was not disbursed from the budget, and of course, this is very painful. And those figures Mr. Marchenko voiced on the need of Ukrainian budget, these already accounts for this cut. What else was done? In July, when it became obvious, really, this was the months when it became obvious that the war would last longer and that it's not sustainable to perform the policies, as it were. The hryvnia, Ukrainian currency, it was devalued from like 25 to 36.6 hryvnia per dollar. It was huge. And inflation, again, it's close to 30% till the year end. At the same time, no spending was adjusted for inflation. So the inflationary tax is really big on each government official, on each teacher, on each doctor, on everyone. And these like 30% increase, which should accompany this inflation, it was not performed. On the destruction and on the budget spending on the destruction, I have a calculation. This is the lower margin, $127 billion of destroyed assets. This is the estimation of the project Russia will pay. This is not World Bank's. World Bank gives 350 something figure. So if we take the lower margin, this is $4 billion per week. This is $4 billion per week of these destructions. So, I mean, any anti-air missile system would cost less, yes. I understand that this event is not about weapons, but still it is about weapons, right? If we are talking about the immediate needs for the reconstruction, these will help to decrease the amount of spending which should be done at the next stage, right? So if you have, for example, Irpin, this is the city close to Kyiv where like many buildings were destroyed. I have been there in August and I looked at it, and many roofs in these buildings, they are still damaged, yes? So the building is in more or less livable condition, but there is no roof because it was there was shelling, there was bombing, and people, they are, what they are doing, my friends living in Irpin, they're trying to gather money to collect them by, Facebook and crowdfunding and saying, okay, guys, could you please help us to collect 15 million hryvnias to repair our roof? Because municipalities and central budget, they just don't have this money. And could you imagine that the winter comes and this building is just destroyed totally? So when now you can invest comparatively little amount of funds, after the winter, it would be the total reconstruction. So it's important that government makes at least some capital spending, while this is not the case for the moment. They are cut to the very, very, very essential stuff. And my pre-last point, this is not all the destruction. Yes, these estimates, they were made before October 10. And on October 10, as the minister said, there were shelling, there were attacks, and they destroyed 30% of our, 30 to 40% of our energy infrastructure. I don't know if someone saw pictures from Kyiv. This is my city. This is always full of lights, yes, and this is a big city. Over 4 million people live there, and it's always alive. The night is always young there. Now it's complete darkness, and the pictures are really terrifying, and they speak volumes about it. But not only about the mood of Kyiv people, but also about the possibility of doing business, right? Because how can you do business? How can you work when you don't know if there will be light, if there will be electricity? This is very difficult. My colleagues in Kyiv now are working, they are calling each other and asking whether it is the electricity and internet in the office, or should they come or should they stay at home. If this situation is not resolved, the taxes will drop, right? The activity of the business will drop, and the budget will receive even less money. So that is why it is important to invest into this infrastructure first, into trying to safeguard it, and the second into fast repair of this infrastructure. And my last point, last but not the least, I felt, yes, from this Berlin conference, reflections from, I have not been there personally, but I have several people attending, that the sense of urgency in Ukraine and the sense of urgency in Europe, they are very different. In Ukraine, it's really day-to-day struggle, right? And in Europe, several months discussion of a plan between Lugano and Berlin, where the difference for me as Ukrainian between Lugano and Berlin, it was not really striking. Yes, I would put it like that. So for us, time flies a lot faster. And that is why this thing, financial Rammstein, it's really needed, it's really urgent, and we are really grateful for what you said, that finally the European Union can disburse this 3 billion at least, so we have the money till the end of the year. I hope there is no legislation to be Okay, no additional legislation. That's a good news. So yeah, we are very grateful for the support. We just hope that the coordination will be here, because this is vital. This is vital for the country to have budget support and to have the country, the government up and running, because without the government, there will be no country, and all the weapons and all the assistance, it will go in vain. Thank you.
Thank you so much, Maria. We already have a number of questions in the Q&A, and I should say at this point that everybody who's participating online can ask questions on Slido. The specific requirements are on the Bruegel website, so I'm not going to repeat them here. But a number of questions have already been asked, and perhaps predictably, a lot of those questions are for you, Gert-Jan. So thanks again for coming, because you have the most difficult job here among us, I mean. Maybe I should mention the question by Bruegel's director, Jermin Sedlmeier, because it kind of encapsulates something that is also in a number of questions asked by anonymous participants. Is EU financing for Ukraine constrained by a sense that donors have insufficient control over how the money is spent, or is this secondary? So issues of governance of the spending, of integrity of the spending, let's call a spade, have been prominent in the thinking of a number of donors, but also of external observers. So can you tell us a little bit more about that? And we know that in the past, Ukraine has been a difficult country for donors. So let's go into these issues, because they shouldn't be taboo in our opinion.
Yes, thank you, Nicola. Well, I think there are people in Ukraine who have a much more difficult job than I have, so I don't want to lay any claim to it. But the point that is raised here is very important, and it's a tricky one, because we are dealing with a country at war. So the conditionality that is normally inherent in these type of support packages has to be different compared to what would be possible in conditions of peacetime. Nevertheless, it is also clear that there were pre-existing concerns when it comes to issues such as corruption, anti-fraud, oligarchs, to be very clear. And I think for the support, which is very strong at the moment, it is essential that we take out minimal safeguards against these issues, so that we don't have problems as we implement this 18 billion euros support package. This cannot take the form of the type of rules we would seek to implement in an EU member state. Let me be very clear. But equally, we have to avoid a situation where, let's say in October, some mega scandal erupts, and let us hope that you were not right, that aid would need to be scaled up. But if ever we were in a situation where aid would need to be scaled up and these issues were to materialize, we would really be in a very, very hard way. So there will have to be a bit more conditionality, I think, in this approach than we've had so far in respect of these issues.
How will you instrumentalize that conditionality? I mean, what kind of infrastructure for control will the European Union have, or the other donors? And again, sorry for raising issues that are perhaps not the most pleasant, but how do you combine trust and control, as Lenin famously put it?
Yes, well, I don't want to speculate too much about it, because we are still working on this, and we still need to discuss it with our Ukrainian partners. But a minimum of reporting, for example, on final beneficiaries is important. That gives you very good indications of where the money ends up. And it has to be proportionate, as I said. It cannot be that we require a very, very detailed information, which is simply not feasible in wartime. But there are a number of proportionate measures that I think can be introduced and should probably be introduced moving forward.
And of course, a lot of that is about monitoring and fact-checking. Will the EU have a capacity to do that on the ground? How do you think of the ability to, oversee what's happening in reality as opposed to in theory in a country at war?
Well, the European Commission already has a dedicated service for the Ukraine. which is in charge of the existing support programs. I could imagine that these people who are working very closely with Ukrainian partners could take on some of these tasks. There is undoubtedly a resources issue. Our president said yesterday that she offered to host the secretariat of the platform in the Commission. Naturally, that can not be done with the resources that are presently working on the Ukraine, especially if we move beyond next year. So if we want to demonstrate leadership, then we also have to put our own money, our own resources where our mouth is, and we have to scale up.
Lots of challenges here, and I'm sure we'll have follow-up discussions with you and your colleagues as well on these issues. Let me turn to maybe Beatrice and Maria. There are a number of questions about business in Ukraine. So corporate activity, loans, grants. How can the companies that operate in Ukraine be further supported? We heard from you, Gillian, that there is a lot of adaptability in the corporate landscape, but maybe you want to comment on that, and Beatrice and Maria.
Ukrainian business in different sectors.
Go ahead.
Ukrainian business demonstrated different levels of resilience, of course, and it's understandable. Like, for example, over 50% of metallurgy, it was just destroyed by Russians, and metallurgy is one of the most, one of the biggest Ukrainian export products. And
sorry, which product was that again?
Metallurgy, metals and mining.
Metals.
Okay. Yeah, and for example, Azovstal, and this is an famous plant situated in Mariupol, and Mamka Ilyicha, and the others, many others. But many industries survived, and companies even improved their expectations. They are still below this neutral level. We have the monthly questionnaires, like what do you expect, the situation will be better or worse. It's still below the neutral level, but it is better than several months before. And companies are gradually renewing, increasing their activity. I think that like 70% or something of companies are working at least half and more of its capacities in different sectors of economy. The situation is different. About the support, unfortunately, banks are not very keen to support the business because the risks are huge and there is no guarantee. So what they're doing, they're providing this 5.79% per annum loans, which are guaranteed by Ukrainian state. So this is sort of a portfolio guarantees funded by the budget and mostly to agrarian companies, so that farmers could sow. They could buy fuel, they could buy fertilizers, they could buy grain, they could do the campaign, and next year they will be able to harvest in the territory. So this is this governmental program. And the banks are not really relied to. They don't want to provide
extend
loans,
credit,
to extend credit because the risks are big, and no interest rate will cover it, I think, because of the war.
I have to say, something that has been impressive has been the ability of the banking sector under, of course, the leadership of the central bank to continue to provide at least payment services during the wartime situation, including in very challenging conditions. But as you say, extending credit is one step further.
Exactly, yes. And the transmission mechanism is fully broken because the credit market is not functional. So we are really happy that the banks are able to provide the payment services, and this is something which is important for the stability of the country as a whole. And National Bank's role in that is very big and very important, because what it did, it allowed the banks not to recognize the loans to the companies as NPLs if they have, for example, some period of non-payment on the loan because of the war, and many capital requirements were relaxed, and the liquidity support were in place. So yes, this is also some temporary situation, because sooner or later the losses will be they will be recognized and the capital issues will be raised. But for now the situation is like this. Yeah,
I have to say the financial stability aspect of the situation has been pretty impressive. Beatrice?
Maybe what I would like to mention is that Ukraine is a huge country, and there are very, very different regions. It speaks a bit back to the needs of these different regions. So in this chart I was mentioning before, the minister made differences between 4 regions. One is the front line, which is obvious. Then there are the support regions, but there are also the deoccupied regions, where initially the Russian troops had been, where there has been a lot of destruction. And then on the west, there are the regions which have so far, basically the back line regions, which until very recently have not suffered any immediate damages. So in terms of the different dynamics of the industries and of the businesses in these different regions, it's of course very, very different. And that's also why it is not correct to say, well, let's just wait until we have won the war, and we now need to think about the financing of the war only in terms of budgetary support, and then we think later about the reconstruction. This needs to be happening. Repair needs to be happening in certain regions, and already the sort of leapfrogging to new energy sources needs to be happening everywhere, where it is about, the short run right now, when the critical infrastructure is being hit, it is about somehow reconnecting. But then very quickly it will be about also transitioning to longer term clean energies. So the point being, the overall point being, that Ukraine will have to undergo a massive structural change.
Right.
A massive reallocation of resources, massive new skills will have to be learned, capital, physical capital, but also human capital, which is now being displaced. All of that will lead to a very, very different structure. Economic structure is already leading to a very different economic structure. So it's, I think, talking about just the businesses that were there before and how they are functioning today is a small part of what needs to be talked about.
And in the Q&A, Kristina Kasianova mentioned that 25% is the current bank rate in Ukraine, I guess, for business lending. She's also asking if we can comment more on political risk insurance. I don't know, Gillian, do you want to comment on that, or what we said about Ukrainian business support?
I mean, I think this is we've spoken a lot today about how we help the sovereign in Ukraine and how we keep the budget going in Ukraine. I think we have to look back at the last few years, and for all the successes and macro stability that there was in the lead up to the war, there was a success in bolstering FDI and foreign participation to a large extent in the private sector in Ukraine. And we're now entering a world, hopefully soon, where we will be discussing large reconstruction packages for Ukraine, and the amounts of money that are involved are so large that it will require active participation from the private sector in the rest of the world if it's going to be successful and we're going to put Ukraine on a solid growth trajectory. And then how to do that? It's tricky, it's not easy. Part of it is going to come back to policy in Ukraine, part of it is going to come back to governance, corporate governance, and continued improvements on that side. Maybe more progress on privatization, more progress on land reform, more progress on integration with the EU and what we're seeing in terms of these transport routes into Romania, for example, to get CEDAW, something like that on a much larger scale. It's a very complex issue, but if the reconstruction is going to work in Ukraine, I think, how we're going to interact, or how Ukraine is going to interact with the private sector, how institutions like the IMF and the EU and the US are going to interact with the private sectors is going to be very important.
And I want to emphasize something that Beatrice said, which is that there's in a way, a false dichotomy between paying for running expenses and paying for reconstruction or replacement of equipment that is being destroyed. The energy facilities in the last few weeks being the obvious example, but I think we also have to be prepared, and this is extraordinarily difficult, for a situation where we will pay for new energy facilities to be replaced and then destroyed again by the Russians, and then replaced again, and then destroyed again and replaced again. So we'll have those cycles, I think, in a scenario of a longer war, and we have to face them with open eyes. Gertjan, I know you are very time constrained and you have to leave at 45 sharp, so we have a few minutes left with you. Let me just ask another question, which is opening another can of worms, right? Beatrice told us the EU should be the anchor for reconstruction, but if we focus on the wartime assumption, we assume we're in a long war, how does that play out? Beatrice also told us about the need for donor coordination, not competition. And we also know that there are elections in the US in a few weeks, if not days, and that we may face a more difficult environment in the US in terms of donor atmospherics. So can you tell us a bit more on how the European Commission, and I know that will be your closing statement, how the European Commission is envisaging these issues of EU leadership, EU coordination, US leadership? How does all this come together?
Well, I think we have to avoid a situation where we get into donor competition. This would be terrible, an embarrassment, frankly, for the free world, if I can use that term. Equally, coordination is important, so this is not competition, but without coordination, it will be a mess. I think we also, in Europe, and I'm speaking here in a personal capacity, I want to be clear, we have a responsibility which is a little bit different from the Americans. This is our backyard. The country is an EU candidate country, and that means we have a deep responsibility. It's also a country fighting a war against an adversary who might one day consider fighting a war against our member states. So all of that means that we have to step up to the plate. And I think this is felt. And that means also that we need to be ready to provide this coordination, not just when the war is over and reconstruction comes, because it is very true that these things are intertwined, and this is also the reason, I think I already mentioned it, why our president was referring to the need to set up the platform already at the end of the year. There is no time to lose. So I think the Commission is willing to provide that effort. It is not a power grab. I mean, the last thing, honestly, we need to get into is a discussion about who leads what. I think we don't care. It's a matter of efficiency, of helping the country to get the money to where it is needed. When we talk about the contributions Europe makes to the Ukraine, we always talk about Team Europe. That is the EU budget plus our member states. That's also what our president did yesterday. So we need to start moving. The Commission is there for a reason. There are certain efficiencies in coordinating these things at the center, but it's not about competition, it's about effectiveness. Thanks.
Thank you, and thanks again for having been with us today. To you, Gertjan. I think for the others, we'll take a few more minutes, if you allow me, because we may also take questions from the in-person audience here in the room. But Gertjan, I'm very appreciative that you could join us in person, and I know that you also have a war to fight in a way in terms of the European Commission's action. Do we have questions in the audience? I guess we do. Yes, please. Wait for the microphone so that the online audience can hear you.
Certainly. Thank you for the fascinating discussion. My name is Scott Richards. I lead an investment advisory business called Cross Boundary in Eastern Europe out to Central Asia, and sit on the supervisory board of Bank Lviv in Ukraine. I'd be curious to get your thoughts in terms of what sort of structures or policies could support credit creation, in particular for private business post-war. You know, I think you very rightly said the performance and leadership of the National Bank of Ukraine has been extraordinary throughout the war. We saw a much greater degree of deposit stability than would have been expected. However, I think we're all aware that the level of NPLs in the system overall is very likely to be high. So I'd just be curious in terms of your thoughts, what sort of structures could be used to recapitalize the sector? Are there any case studies that you would look to prepare for that transformation.
Thank you. Let me see if there are maybe one or two other questions we can take from the floor. If not, then over to you for concluding remarks and also on this question, which echoes what we already said about business support. Let me just go through the remaining panelists and maybe starting with you, Gillian, then Beatrice, and Maria, you will have the last word.
So I don't think there's an easy answer to the domestic banking system in Ukraine generating a huge amount of credit over the coming 12 to 18 months. The banking system had already shrunk significantly. Part of that was a cleanup that needed to happen. But when you look at private credit to GDP right now, it's running at about 20%. Given the military issues, given the confidence issues, given the growth issues, I struggle to see the banking system domestically stepping in and taking credit risk. I think we need to go down the traditional routes. It's going to have to start with the EBRD and the EIB coming in. It's going to have to include, once we get a fully fledged IMF program in there, a set of stress tests for the banks to determine recap needs, which I think will be a fraction of what they were in 2014, but there will likely still be some. And that's where I come back to the issue of what is the role of the foreign private sector in Ukraine, and how do we foster a constructive debate and interaction between the foreign private sector and the domestic economy in Ukraine going forward.
Beatrice?
Maybe I would like to say something about not so much the banking recapitalization, but about the question where we stand right now and how our discussions, in a way, already may seem dated. So the realization that that every day there is critical infrastructure being destroyed in the Ukraine as we speak, that people are struggling because they are disconnected because they have blackouts, because they cannot heat, because there is no sewage that works. All those horrible things that happen when that Europe now thinks we have been able to avoid by paying a very, very high price to somehow create a certain buffer in terms of energy. All of those uncertainties are now clear and present in the Ukraine. And I have been saying for a few months winter is coming, but now winter is almost here, and in the Ukraine, they are facing a huge uncertainty from day to day, not only for their lives but also for their
right.
For energy needs that are absolutely essential. And that is where the discussion, in a way, already has to change again. The needs that they have right now in terms of small mobile units that can be deployed, that can sort of repair or not repair, replace destroyed infrastructure. And yesterday, a number was mentioned of such units, which is enormous. So we have an additional issue right now, and that may get worse. Let's face it. That may not be over. Right. So we may already be talking about a situation that is much worse than 2 weeks ago.
And as I think it's very important to emphasize that, and as we discussed before, wars are unpredictable, so we may have other bad news of the same nature coming up. Sorry for saying that in the near future. On this unhappy note, Maria.
Yeah, we might have this. I want to reflect a little bit on the question. As far as I remember, Bank Lviv. Are you a representative of Bank Lviv, or what was the bank name? Lviv, yeah. I think your bank some time ago, like several weeks ago, got the guarantee from the either IFC or the EBRD on the loan portfolio for the loan. So this is one way to This is one way to support Ukrainian business for the international organizations, because nobody else will step in, for the banks such as EBRD or IBRD or the others to provide these portfolio guarantees. The second, the other way, and actually this is the answer to the question of how to support business. There is a war insurance scheme. It has now been discussed. The Ministry of Economy announced that it has some project with MIGA, which is the World Bank arm for war-related insurance. But it is, of course, like far from the stage where it could be scaled and on a massive scale provided to Ukrainian companies, businesses, people. But this is the thing we need, and this should be also coordinated on intergovernmental level. So first, it would be like sort of a sovereign guarantees from the group of sovereigns. Then the reinsurance market steps in, where the reinsurance companies are enjoying a partial guarantee from this pool of guarantors, and then Ukrainian insurance providers, they can be like fronters of all this big scheme. But this is all in the stage when the discussion is like really early. And the rest, I want to support my colleagues and say that safeguarding the energy flow to Ukraine and safeguarding the energy infrastructure would be very important for business, extremely important. Yes, thank you. That would be all.
Thank you. Lots of challenges, but lots of determination in what I heard today. I want to emphasize again our thanks at Bruegel for the excellent partnership with CES in Kyiv and with CPR in Paris. With you, Maria and Beatrice, and all your colleagues. Thanks very much to all the audience for the engagement, and we will continue this conversation. In a way, there was a great coincidence between the Berlin event yesterday and this one, but for us, we will keep active in that space. So thanks to everybody for engagement, and see you soon again.